Hello guys, I hope you all are doing well. In today's video, we are going to discuss a bear put spread. This is also called a put debit spread, and this is a strategy that you would use if you think that a stock is gonna go down. However, you just don't wanna straight away buy a put. You want to limit your capital investment and also reduce your max loss. And this is a part of a Robinhood series that I'm running on my channel, where I'm just putting all the strategies in options that you can play in Robinhood, and all within 5 minutes. So if you wanna do check them out, I'll put that playlist link in my description. You can check them out after watching this. So let's start with this video. Okay, so step one is you search for the stock. In this case, I'm searching for AMD. Now step 2 is selecting the expiry date. For this you will go to trade options, and then for expiry date I'm just gonna go out to say 30 days. So I'm just gonna select January 5th as my expiry date. Now step 3 is the leg 1 of this strategy, which is buying a put. So for this you make sure that you have buy and put selected, and then you will select the strike price. So for this case, I'm just gonna select 115. This is just assuming that let's say that you think that AMD has gone too high and it's gonna go down in near a couple of weeks. So for that reason, I'm just selecting 115. Now, as you can see that if you just straight away buy a put, you would have to spend $234, and that is gonna be your max loss. And if AMD does not go down and it stays above this 115 strike price, you're gonna lose all that investment. So how do you reduce that? That's where this strategy comes in. Now step 4 is the key step in this strategy, where you are gonna sell a put right below your buying a put strike, which was 115. So I'm gonna sell a put at 114, and as you can see that combining both is gonna reduce your capital investment. Okay, step 5 is profit and loss, and Robinhood will clearly show you the profit and loss graph in this. And as you can see, now your max profit is capped to 67. However, look at your max loss, right? Earlier it was $234, and now your max loss is capped to only $33, right? So that's where the key or crux of this strategy is. Okay, step 6 is entering the limit price. And as I have mentioned this before as well, that whenever you enter the limit price, since it's a debit spread strategy and you're gonna pay to enter this strategy, you will have to go closer to the ask price. So I'm just gonna select 0.3, which is 30, right? So in this case I would be paying $30. I'm going closer to the ask of this, because if you put a bid price, then it would be hard to get this order filled. Okay, step 7 is that you review everything, that everything looks fine, and just swipe up to submit. Okay guys, so that was a quick video on how you can execute a put debit spread, also known as bear put spread, in Robinhood. And I hope you have liked this video. And as I said, you can always check out the complete playlist. And if you like this video, do give a thumbs up and subscribe to the channel if you have not. I'll talk to you in my next video. Till then, happy investing guys. Bye bye.